Welcome, curious minds, to another Agentic AI podcast. Today, we're plunging into what looks like a really pivotal year for enterprise AI, 2025.
That's right. We're looking at the blueprints CIOs are using, aren't we? How they're figuring out budgeting, building, and buying for generative AI.
Exactly. And this isn't just hype anymore. We're talking strategy that could unlock, well, trillions in economic value. Gen AI is moving out of the lab and into core business.
Yeah, and the basis for this is some fresh data, right? That A16Z survey.
Spot on. 100 CIOs across 15 industries. So it gives us a pretty solid pulse on what's happening on the ground.
And what's really striking is the speed. Just
Yeah.
last year, was it 16% of enterprises were actively working on Gen AI?
Yeah, only 16%.
Now it shot up to 89%. Well, that's incredible acceleration.
It really is. And it seems to be setting the stage for this hybrid approach, more agentic AI maybe, aiming for more autonomy and efficiency.
Definitely points in that direction.
Okay, so let's unpack this. We'll explore how leaders are setting investment priorities, the challenges popping up, and maybe some practical tips for moving from just trying things out to scalable solutions. Should be insightful.
Looking forward to it.
So 2025, Gen AI goes central. What does that actually mean for the average enterprise? It's more than just a new tool, isn't it?
Oh, absolutely. I mean, the potential value is massive. Trillions, as you said. That's a huge carrot.
There's always a but.
But yeah, getting there depends entirely on making smart choices, especially around adoption. The momentum's there, sure, 89% moving forward. But leaders are also, juggling. They're dealing with cost control, compliance, regulations.
Yeah.
It's complex.
Sounds like a mix of real excitement, but also maybe a healthy dose of caution, pragmatism.
That's a good way to put it. Excitement meets reality.
Yeah.
What are the big priorities we're seeing from the C-suite for this year, then?
Well, the budgets tell a story. CIOs are expecting, on average, a 75% increase in AI spending.
75%. Wow.
Yeah, it's a significant jump, and it signals that shift, away from just innovation funds tucked away somewhere.
And into the main IT budget lines.
Right.
Permanent spending.
Exactly. And there's also a clear tilt towards buying third-party tools. Speed seems to be the driver.
Though, it's worth noting, the regulated folks finance healthcare. They're often still leaning towards custom builds, compliance needs.
Right, that makes sense. Okay, so the money's flowing. There's a preference for buying.
Right.
Where are they actually pointing these new AI capabilities? What problems are they solving?
The big three seem to be software development, speeding that up, dramatically enhancing customer experience, and automating business processes.
Okay. Standard efficiency plays, but supercharged by AI.
Pretty much. It does vary a bit by industry, naturally, but underneath all that, you still have those persistent concerns. Governance, security.
And the talent gap. Integration headaches.
Always. Those are definitely part of the equation CIOs are trying to solve.
Let's dive a bit deeper into these strategies then. That 75% budget growth is, well, it's staggering. Where's that money actually going? How's it changing the IT spending landscape?
It is substantial, yeah. And what's really telling is how it's being budgeted. It's becoming formalized, part of the permanent IT structure.
So not just special project money anymore.
Exactly. Those separate innovation budgets, they've actually dropped way down from about 25% allocation to just 7%. It shows real commitment, institutional buy-in.
Interesting. And what about the tools themselves?
Well, adoption is widespread. Over 90% of CIOs are testing third-party apps. And we're seeing diversification, too. 37% are using 5 or more different AI models now.
Up from 29% last year. Why so many models?
It suggests they're optimizing, trying different models for different tasks, maybe for better performance on one thing or better cost on another. It's getting sophisticated.
Okay, so that brings us squarely to the build versus buy question. It's always debated in tech, but with AI, it feels maybe even more critical.
It does. The stakes feel higher.
The data shows this lean towards buying for speed. But is there a risk there? If everyone buys the same tools, does it make it harder to get a real competitive edge from AI? How are CIOs thinking about that tension?
That's a really sharp question. And yes, that tension is exactly what many are wrestling with. Buying is faster, definitely, especially for things like customer support, where the tech changes fast and building in-house is tough to maintain.
Right.
But as you hinted, those in heavily regulated spaces, finance, healthcare, again, they're much more cautious. Compliance, data privacy. Those concerns often push them towards building themselves or using on-premise solutions. They need that control.
So it's about control versus speed, essentially.
That's a big part of it. And also differentiation. If you build, you potentially own unique IP. If you buy, You get speed, but maybe less uniqueness.
Can you walk us through the main trade-offs there, build versus buy for AI?
Sure. So building in-house gives you high IP ownership, right? And you can tailor compliance very specifically. That's key for some sectors.
But the downsides?
It's slower, much slower to get to market. Needs significant upfront investment talent, infrastructure, and scaling and maintenance can be a real burden.
Okay. And buying?
Buying is fast deployment. Costs are more predictable, often subscription-based. Scalability is usually handled by the vendor, and compliance is more standardized.
The trade-off being less unique IP.
Generally, yes. Less direct control over the core technology, potentially lower IP ownership.
What really stands out to you in that? It feels like there's no easy answer. It's not just if you build or buy, but maybe how you combine them.
Exactly. That's the key insight, I think. It's not just one or the other. The smartest companies are figuring out how to orchestrate both.
Orchestrate, like a conductor.
Precisely. This is where agentic AI orchestration comes in. Think of it as a smart layer that can manage and direct different AI tools, some built, some bought, to work together on complex tasks autonomously.
Okay. So it makes it easier to plug and play different components.
Yes, reduces that friction, that lock-in risk we talked about, and it enables more intelligent, self-managing workflows. Gives the enterprise more autonomy, more control over the process, even if not all the tools are built in-house.
That sounds powerful. Let's talk industries. It's fascinating how different sectors are tackling this. What are some of the key variations you're seeing?
Variations are really telling, aren't they? It's not just what tech they use, but how their environment shapes the strategy.
Like finance.
Right, finance. Highly regulated, yet they're adopting aggressively for things like fraud detection, personalized services. Gen AI is a top budget item for almost half of them.
Why so aggressive despite the regulation?
I suspect the ROI is just incredibly clear and fast for those use cases. It pays back quickly.
Makes sense. Contrast that with healthcare.
Healthcare has amazing use cases, diagnostics, drug discovery, but data privacy rules, HEBA, all that.
Yeah.
It often forces them down a slower path. More custom builds, more on-premise. It's not lack of desire, it's the constraints dictating the approach.
Yeah.
It really impacts their build-buy calculation.
So regulation is a huge factor in the how. What about retail?
Retail seems to be having a lot of success, actually. 96% of their AI deployments are meeting expectations. Big focus on personalization, recommendations.
And manufacturing.
Predictive maintenance, optimizing supply chains. Really integrating AI into the nuts and bolts of operations.
So industry context is absolutely key. When CIOs are trying to get tangible results, what specific use cases are they focusing Gen AI on most?
Across the board, customer experience enhancement through personalization is huge. Workflow optimization via automation, that's another big one. Ensuring compliance, managing knowledge better with enterprise search. These keep coming up.
And you mentioned software development earlier.
Yes, the impact there is pretty staggering. In some advanced teams, they're reporting nearly 90% of code is now AI generated.
90%, up from, what, 10, 15% not long ago?
Exactly. It's a massive leap.
That's incredible efficiency, but does that bring new challenges? Like, who owns the IP of that code? What happens to developer skills long term?
Excellent points. And this is where agentic AI comes back into the picture, potentially helping manage some of that.
How so?
Well, agentic AI enables these autonomous workflows. You can deploy, say, private, maybe even no-code AI agents that mesh with your existing systems. They can execute tasks consistently, enforce governance rules, manage the output of AI-generated code according to policy.
And handle the data privacy aspect.
Yes, by keeping processes and potentially sensitive data within the company's private infrastructure. Some platforms offer rapid deployment, weeks, not months, which helps with scalability and addressing talent shortages too. They can even enable self-healing IT systems.
So agentic AI isn't just another tool. It's potentially the orchestrator, the governor, the thing that makes all these other pieces work together effectively and safely.
That's increasingly how it's being viewed, yes,
Okay.
as a central piece for scalable, compliant automation.
Okay, the potential is clearly huge. But let's be realistic. What are the big roadblocks? What challenges are CIOs actually hitting when they try to adopt this stuff?
Oh, there are definitely hurdles. Data is often a big one. It's fragmented, stuck in silos, hard to integrate. That complexity can slow things down considerably.
And the agentic workflows themselves. Any downsides?
Well, if you don't implement them strategically, you could potentially increase system lock-in to a particular vendor or platform. You need that orchestration layer we talked about to maintain flexibility.
And compliance keeps coming up.
Always. Especially with things like the EU AI Act, various financial regulations. These demand very specific privacy-first approaches. It's not optional.
What about the people side? beyond the tech.
Hugely important. Change management is critical. You're asking people to work in new ways, trust AI systems. That requires a cultural shift.
And skills.
Absolutely. The tech evolves so fast, it just widens existing talent gaps. Continuous upskilling isn't just nice to have, it's essential.
And the cost. We mentioned budgets are up, but...
Right, balancing that innovation push with cost efficiency is key. And that stat, we saw 40% of agentic AI projects potentially getting canceled.
Yeah, that's concerning. Why?
Either cost balloon unexpectedly, or the project fails to demonstrate clear value quickly enough. It really highlights the need for sharp focus on ROI and solid planning from day one.
Okay, that 40% risk is a serious reality check. So, wrapping this all together, the opportunities, the challenges, what's this strategic advice for CIOs mapping out their AI plan for 2025 and looking ahead?
I think the consensus is, start with a really clear blueprint. Don't just chase shiny objects. Assess your use cases rigorously. Prioritize based on real business value.
And then?
Pilot hybrid solutions. Don't be afraid to mix build and buy, but do it thoughtfully. Use that agentic orchestration idea to tie things together intelligently.
Governance first, not last.
Absolutely critical. Build in robust governance from the very beginning. Ethics, compliance, security, they have to be foundational. We saw 65% of CIOs saying they prioritize innovation, but only with strong oversight.
So experiment, but with guardrails.
Exactly, and leverage those agentic AI platforms. They seem purpose-built to help manage the complexity, ensure compliance, and achieve scale more practically.
This has been a fascinating dive. It really feels like 2025 is the year Gen AI stops being next big thing and starts being, well, a thing.
Yeah, moving from pilots to production, from niche budgets to core IT, the shift is real.
We've seen the huge budget jumps, the complex build versus buy choices, and this rising importance of agentic AI for autonomy and orchestration. It's a complex landscape.
It is. And connecting it all, I think the big takeaway is moving past the hype to pragmatic strategic application. The data shows this kind of pragmatic optimism. Success seems to hinge on careful planning, solid governance, and strategically using automation, especially agentic automation.
It really boils down to that balancing act, doesn't it? Pushing innovation hard, but keeping tight control on oversight, compliance, and costs. That seems to be the recipe for success.
All said.
So for you, our listener, the real question becomes, how will you strike that balance in your own context? How will you harness innovation responsibly as AI, and maybe agentic AI, becomes more central to your operations?
Food for thought, definitely.
We encourage you to check out the original A16's use research for more details, and you can find more resources on agentic platforms at places like lowtouch.ai as well.
Good resources to explore further.
That's all for this deep dive. Until next time on the Agentic AI podcast.